Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing green arrows around the world this morning after PMI data came in better than expected. And of course, military action in Syria has been delayed. Our futures up about 12 to 16 handles. Scott, how do we handle today?
Well, that's what a lot of traders are asking themselves. I know for me, I talked about being tactical in August. I talked about going into the weekend pretty flat. And there were basic cases for being either one. You could have said there's some strong stocks out there, I'm going to be long into the weekend. And some could have said, listen, I see some of these leading indices very weak. I'm going short, just in case there is some kind of altercation. So the president kicked that can down the road. And at this particular point, you come in and you look at this pattern, there's a lot that could happen here, for intermediate active guys. This is your longer term November trend that we basically closed right on. So, this correction pretty much started back here with the taper talk with the head and shoulders top. This micro version led to this move lower. And now today, I think this is what you have to look at. You have to look at the futures are up, right? The spiders, if you look at your machine right now, are basically right here around 165, which is last week's high. If we hover above 165.04 for the next, just say, for 30 to 60 minutes after the open, chances are guys like me who would like to put on some exposure, might get involved in those who went out short thinking we break this line, cover, and that gives you a move to about 165.84, which would fill that gap. And then you have, in the coming week or so, a bigger gap that comes in right around 167.40, which is a spot the bears would have to defend.
So as you said, that's for intermediate active traders. What about long-term investors? Do they stay the course here?
It's funny, this weekend I was with a lot of family and we were talking about hypotheticals. And I was saying to, my actual brother-in-law, I'm like, could you imagine 30 years ago, we were both 30 years old, and we said we're going to put together a long-term macro plan buying S&P funds for 30 years. Just say this is 1985, right? 30 years, less than 30 years ago was 1985. So if you did that, okay, you then lived through 1987, which was a horrendous crash. You lived through 2001, okay, or the tech bubble, 9/11, and then the financial crisis. And right now we're 5% off all-time highs. You're probably only 60, not even at the retirement age, and you have a great average cost. So do you pull out of your long-term plan now? I don't think so. And if you're 30-ish now and you're looking at the next 30 years, you don't pull out. But if you're an intermediate active guy trading for P&L, it's different. But I would say the more, I would say, I wouldn't say macro guys, but longer than intermediate who's saying that this correction is going to be different, they're thinking we get a bigger head and shoulders formation being built here. So if you look at the chart of the SPX, we'll show it with that, okay? You go to the SPX, you will see, you do have, this was your micro, okay, head and shoulders top pattern, which was very good for us. And, it showed us take some risk off, and that was your move lower. And now, if you want to say there's going to be a more macro head and shoulders formation, okay, which, I would say macro could be a little bit more like, more than a 5% pullback. It could lead to a 10% or so. Here is your left shoulder. Here is your head. Here could be the potential of a right shoulder being built. So you'll know where the bears have to make a stand. And then this could wind up being, your neckline, okay, right, going across, this area. So at this particular point, you still have a few weeks, for this to build. It could be built through the jobs report, through the Fed, through the summit. Who knows? But overall, this was a very shorter term time frame, and this would be a bigger term time frame because this would give you a move from about 700. If just say this is 1629, that's what 70 handles. So 70 handles from here would take you down to maybe a retest of the 200-day and those June lows. So we shall see.
Well, if we go back to those intermediate active traders, I mean, you yourself saw the futures tick down this morning after reports that Russia said that it detected the launch of 2 ballistic missiles. So if we're seeing that happen already for our intermediate guys, what do they do? Do they just brace for continued choppiness? Because Syria is likely to remain in the headlines for quite some time, even if the president kicked the can, as you said, down to Congress.
Well, what if Israel does something and says, you know, I'm not waiting for the president to act like a president? No, I'm sorry. Well, anyway, not to be political, but you know, with that said, you know, we were talking last week. What happens when the bombs, you know, go off? You know, because in past history with Iraq and some of the others, you know, they bought the bombs. That's a saying. You know, but here it seems like, you know, if Russia is really that sensitive, and think about it. So this morning, early on, you know, I'm on the ferry and I'm you know, looking at my handheld to see what things are at. I see the futures ticking lower, and I'm like, what is the reason, you know, for this? And it says Russia detecting 2 missiles. So that means maybe we're very sensitive now if we actually have a strike, and we're even more sensitive if Russia's very sensitive to it, because obviously they're a major superpower, and we'd rather, you know, go with them diplomatically to get this, you know, situation handled versus, you know, us versus them and, you know, people drawing lines, because that could get very, very complicated.
And then meanwhile, we do have the jobs report on Friday. How much will that be on traders' minds when we have all of these other headlines?
I think there's a lot going on everywhere, so you don't have to be a hero regardless. Even if today's rally holds, I don't think you have to, you know, jump in and feel like you're missing something. And the same way, if you think that doomsday is going to happen because the missiles are going to go off, you know, make sure if you're short, you have a plan to cover and make sure you know your risk exposure. For me, I'm staying in tactical because it was a very good, you know, it was actually a very prudent way to be in August and a little bit of July. And if all of a sudden, you know, headlines happen, the market's taken in stride, leaders continue to follow their 8 and 21-day moving averages, I'll start adding on positions, get back into a portfolio approach, and hopefully be able to enjoy the fourth quarter, which really tends to be one of the best quarters for traders. So either which way, let's see when everyone, you know, everyone just came back from vacation, so to speak, and volume hopefully will increase. We'll see what they really want to do. And when we figure out what they really want to do, then maybe we get much more involved. Well,
let's check the temperature then of the different sectors so we can map out a game plan here. And let's take a look at the Russell first, which did suffer a big loss on Friday, and next support now stands at the 100-day.
It seemed like finally, you know, growth got a little scared based on what was happening. So you look right here at the Russell, you will see, you know, here is that trend line. It did close, you know, on the lows, a pretty potent bar, negating the last two. I would say, you know, if the bulls really want to take the pressure off, they're going to have to get a close back above this 102 in order to show that the weakness isn't, you know, the powering situation here.
And retail hanging in there a little bit better, did find some support along its 100-day.
Yeah, this group, again, you know, is acting a little better. Weakened a little bit in the last month, but, you know, retail is something that, you know, it's not like leading the market, it's not pushing it lower, it's just, you know, kind of in the middle.
Right. Well, we are getting into the back-to-school season, so maybe we'll see that perk up a little bit. But we have seen the biotechs show relative strength.
Yeah, this one, you know, you want to talk about some standouts. Look at the IBB, this ETF for the bios. It have been very strong. You look at here, you have your gradual trend from November, which we're testing in other indices, not even testing, and then a more accelerated trend from June that's intact. So with that being said, it's above the moving averages. If you trade bios and you can handle it, you know, this is a great sector to be in. If you don't want to have individual exposure to the bios, maybe, you know, buy the IBBs. And as long as it stays above, I would say 187-ish, you know, stick with that because it is showing relative strength.
And then, meanwhile, helping the bears case is the banks. The XLF has stayed below the 100-day for the past 4 sessions.
Yes, which is something different for the banks. The banks that have been strong have been weakening, and you look at this trend line. It's so interesting when you go back and forth between different sectors. Now look at this trend line. From November, it is now below, and it's hovering below for 4 sessions or so. So can we see a bounce back up perhaps? Yeah, you know what, we might be able to see a bounce back up, but if it gets rejected by this trend line, just say into, you know, a little bit below 20, or that maybe, you know, this is about as far as it can go for the bears to stay in control, you know, that would be strengthening for their case. Because you look here too, this could be your left shoulder, this could be your head, and then this could be, you know, a bigger right shoulder if it wants to build. And if that were to build, you know, that would definitely get some bears roaring on the street that look at these banks, you know, this trend that has been broken has not been reclaimed.
Well, there are, as always, some silver linings. We're going to go in the trenches with stocks that have been hanging in well. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that have been hanging in well. Stocks like Netflix, which broke out on Thursday, and although it did pull back on Friday, still hung above its 8-day. So that's showing some real relative strength.
Yes, and we talk about during corrections, you want to find stocks that hold above their 8 and 21 day, as we just saw a lot of the indices down to their 100 days, some below there. So
right.
With Netflix, it's all about what type of tier size you want to be in and if you could handle the risk. And with this one, it seems risky, but it's been a lot less risky to be long this one. This was a nice little, actionable area before making new highs in the year. Another nice actionable area, and since then, just been hovering the 8-day. So with that being said, I still think it can see north of 300. And at this point, you just maybe have to be a little bit more light or quick feet, so to speak, because because at some point, perhaps it gets a bigger correction, but really until it breaks and closes below this 21-day moving average, if you long it, I would just stay the course. Don't let people scare you out of it.
And how about staying the course with LinkedIn as well? Also has been finding support along its 8-day.
Yeah, and this one, it doesn't move as quickly, but it does move when it wants to. And this has been an unbelievable, longer-term investment for people who identified that cup and handle pattern we talked about well over a year ago, and even recently. You had 2 quarters ago, you had this gap up right here. Then it consolidated for a long time, even after missing or the perceived weaker quarter with that found support. And then from here, another big gap up. Held a big portion of the gap, and now it, hasn't been able to break out yet, but still holding above the 8-day, hasn't been below the 21-day moving average almost since the beginning of the summer, which tells you it's a really strong stock. So shorter term, if the market wants to bounce for a few days, this is should be one of your go-to stocks, and if it could stay above 243.55, this little spot's going to be no problem at 247, and perhaps if this rally holds today for the next few sessions, 250 plus should not be a problem.
And you want to talk relative strength? How about Tesla? Almost 1.8% of gains on Friday.
Well, you can't have a conversation about leadership, strong trends, and relative strength without Tesla. And there are quite a lot of naysayers out there. But meanwhile, the pattern's been strong. It's held a 21-day for almost 6 months, only 1 day below it on that Goldman Sachs scenario that turned into a really nice red dog reversal. And here we are. You look at the chart. Look at this trend. 21-day moving average, tested it there, broke below it for 1 day, and then gave you that red dog reversal. And even if you didn't, you wanted more data, you could have waited right here for this, intermediate little consolidation before it went again. And now look where it is. Another bull flag. This little pivot here is 173 above 173. No reason why it can't continue. So with that being said, that is your pivot. Above 173, you stay long. If it pushes through and fails, like we saw a few different times along the way, that could create a little bit of a pullback. But those pullbacks, as long as it stays above the 21-day, have been very viable.
Yes, and Facebook, impressive as well, made a new high on Friday, 42.26. How much room does it have till next resistance?
I guess from where it hit that intraday high. You look at the pattern here, short term. This was your gap up after earnings. This was one spot to buy. Here was your consolidation. We did a video about this on the street right around here during the market pullback. It showed strength, broke out again, and now here is your 42.26 pivot. You go to your weekly chart to see where it's coming back towards. Remember that cup and handle pattern? Well, here's your cup. Okay, I know this was a little complicated in here, but this created a really nice handle through earnings. Okay, now the next point of reference is 45. So 45 is the next point of reference, and then from there you will have nothing to your left. So we shall see. It's definitely been a go-to stock when the market wants to be a little bouncy.
And Apple, nothing too flashy here, but still holding above the 21-day, so composure then remains intact.
Yeah, it showed a few weakening signs last week. I would say at this point, I'm not in it. It's not as pent up as it was, but it's still in the game as September 10th comes around the corner. You look at the chart here, you draw some lines, and we've been trying to stay somewhat constructive on this. Here is, this bottoming formation. Then after earnings, we had that really nice gap right there, and then it cleared this pivot here. We talked about this 445, took back the 100-day. It could be creating a nice level channel here after, to absorb this big move. So with that being said, depending on your time frame, I would say, today it'll be an interesting day. Does it clear this, what's this resistance here, 496, and then go towards the upper end, or does this act as resistance because it did close on the lows on Friday? So play against this action area, the 21-day. If it starts to break below the 21-day, perhaps, give it some room, because we'll see then how it acts towards the 200-day. It still has, some retracement area to go down. But ultimately, something to look at each day, as there has been some micro opportunity and some intermediate opportunity.
All right, and quickly, let's check in on the 2013 theme of going long. The TBT did give back a majority of recent gains and is hanging at the 50-day. So does that theme still remain intact?
Yes, rates rising has been the theme starting in December 2012 for 2013, but there's times that it gets a little shaky and people get scared, and times when it's not. And if you look at it right now, the trend that it was following since this gap up was holding the 21-day moving average. So that was a very strong trend that got a little overheated right here when everyone started talking about 3%. So if you used a high-level stop when it broke back below 81 and you're not in any, you know what? Hopefully if you use Friday as an opportunity at the 50-day. If not, no big deal. Let it prove that it could hold this little intermediate line here and get back above the trend line here, which is 78.48. So at this point, I think if you're not in it, you want to buy at this area, you can. Okay. Do I think in 2013 we take out 82.80? That I'm not sure about, but I will say at some point in 2014 that these highs should not be a problem.
And gold, last week you talked about it being a spot to sell rather than buy. How do you approach it this week?
Well, if you did use that area to sell, you bought puts and you made some money, you caught a cute little trade on top of a cute little trade. So with that said, you look here right now, this was that, blood on the street low here down on June 28th, nice, higher low here, continued up. At first it did, consolidate in front of this, creating a nice actionable area around 130. Some follow through, and then it just looked a little faulty to me. I saw the miners lead it lower, this and that. Just came into the 8-day. So in perspective, still strong, still looks okay off the lows. I would say it's got to hold above 132, to keep some intermediate guys that are trying to trade this trend interested. So if you did sell up here and you're looking to buy back, this would be an area today. You would have thought it would have been down a little bit more. It's not, so maybe that's a sign that it could get a little pivot here. So at this point, if you caught this cute little short, good job. If you sold some strength, also good job. This will be your spot to see if it can continue, the current move from June 28th.
So as we wade through all the headlines today, first trading session of September, what will be your strategy?
Well, I think I'm in the trenches like everyone else. I'm not in portfolio approach. I'm not coming in with an easy day, long 8-9 stocks, but I'm also not short like some are and figuring out, what they're going to have to do, whether they want to roll it up or whether they just want to give it 30 minutes to cover. So I'm going to see what holds up, the type of action we have today, see if any headlines intraday move the markets. And I'm not going to just look to jump in. It's been a great year. We have 4 months left. July, we were up a lot. August, there was tactical shorts to be had when you saw that head and shoulders top or some of those areas. So for me, you know what? There's no anxiety. I'm just going to try and figure out how I can make some money and how I can work myself back into a situation where if it looks faulty and it looks like leaders start to roll over and they sell this quickly, maybe I do some kind of short strategy for us to break 1627 last week's lows, or if we hold up today, gap doesn't get filled, I can then trade versus that gap and try and stick with some of the leaders that are making new highs above their 8 and 21-day moving averages.
And that's your morning call for this Tuesday. Happy trading. Have a great day.